Very good morning, everyone. How are you all? Now, last class we completed Ind AS 37. I hope you have started the questions from questions bank. Already I have said that there will be 2 questions where you will have doubt, and if you are not asking that question, it means you are not studying, because doubt will come. Correct? In all past batches, student normally asks doubt in that 2 questions only. However, it is very easy, but from the questions you will become, from the information given the question, you might be confused what to do. Correct? So I am waiting for the doubt. Correct. Then we started Ind AS 10. We have understood the objective of Ind AS 10. Have we understood the objective of Ind AS 10? The objective is that to give fair information to the user of financial statement due to condition, for the condition existing on balance sheet date. For the condition existing on balance sheet date. Condition means, can I say, due to contingencies existing on balance sheet date? We can say contingencies. Correct. So that condition, whatever existing on the balance sheet date. Correct. Now, for that condition, we may have some additional evidence from the event occurring after balance sheet date. So as per Ind AS 10 is concerned, what is the meaning of event after reporting date? Are those events which may be favorable as well as unfavorable, and which occur between reporting date and the date when financial statements are approved for issue. It means the date when the board of directors sign the financial statement or approve the financial statement. Then we have done types of event. Types of event means there are 2 types of event. One is adjusting event, one is non-adjusting event. Adjusting event are those events which provide further evidence. The word is further. Further evidence. Under AS4 they have used the word further evidence, but under Ind AS 10 the word further has been deleted. Correct? Understood? Means as per Ind AS 10, adjusting event are those events which provide evidence, not further evidence, which provide evidence, which it can be either initial evidence or additional evidence. Are you getting whatever I am saying? I hope you are understanding. So under Ind AS 10, the word further has been removed, has been deleted, which provide evidence of the conditions existing on a reporting date. Correct? For that event, we need to adjust such event to the financial statement. When we say adjusted means what? We need to adjust what? We need to adjust what? Bolo? Adjust what? Balance sheet mein what? Asset, either asset or liabilities, and due to adjustment to assets and liabilities, either income and expense will be also adjusted. Means if there is an increase in asset, there will be increase in income. Correct? Now corresponding increase in income. So of course we need to also adjust the income or expense. Income or expense. Understood? So adjusted to the financial statement, it means we need to pass some adjustment entry. We need to pass some adjustment entry. If you go to your class 11, in class 11 you have prepared balance sheet. You have prepared balance sheet from where? Trial balance. And in trial balance means after trial balance they used to give some adjustment. That is nothing but adjustment due to what? This standard only. Adjustment means closing stock adjustment. So closing stock we do cost price or NRV, whichever is lower. So that information will be derived after reporting date only. Correct now? And there are many other adjustment, bad debt adjustment, provision adjustment, that is due to what? This Ind AS means already we have applied this standard from our bachpan, from the initial accounts classes. Trial balance given with some adjustment, that is nothing but this. Trial balance given with some adjustment, we used to pass some adjustment entry na, bolna rahe. Correct? That time we were not knowing about provision, contingent liability, but adjustment were given, and the faculty used to give some jana entry for that adjustment. Means adjustment means we need to pass some jana entry on reporting date. Correct? Have you understood? Correct. Then non-adjusting event means what? Which do not relate to any condition existing on balance sheet date. Which do not relate to any condition existing on balance sheet date. Which relate to any condition which arises after reporting date. Correct? So which relate to condition arises after reporting date. Correct? So fire occurred after reporting date. So it is a condition relating to, it is the event related to condition after reporting date. Correct? Yes, sir. So no adjustment required, no adjustment required. However, disclosure of such event is required in financial statement. However, AS4 used to say in reports of approving authority. Bakwas point. Under AS4 it was bakwas point. Bolna yes or no? Yes, sir. So disclosure of such event is required in financial statement. Means under Ind AS, disclosure will be always where? In financial statement. In financial statement means in notes to such financial statement. Correct? Of course, if the amount is material. If the amount is immaterial, ignore it. Because Ind AS does not apply to immaterial item. Understood? Yes, sir. Then I have given you many examples. So let us once again go through that example. If you have doubt, please ask me. Example number 1, have you understood? So example number 1, you can see there was a debtor and fire occurred after reporting date in the premises of that debtor. So of course it is a non-adjusting event. No adjustment required. No adjustment required. Example number 2, there was some doubtful debtor on reporting date and he become insolvent after reporting date. So it provide evidence for the condition existing on the balance sheet date. Therefore, it become an adjusting event and we need to adjust the information on reporting date. So you can see we have increased the provision, increase the provided amount. Better word is provided amount. Correct? It is not known as provision now. We'll increase the expected credit loss to the amount of total loss. Understood? Yes, sir. Then example number 3, I hope this also you have understood that we have received the amount after reporting date. So it gives information that actually the debtor was not doubtful. Therefore, we reverse the entire expected credit loss. Correct? Example number 4, I think the check was received. The check will be received after reporting date. It will not be a adjusting event. It will be non-adjusting. But we receive check which is dated 31st March or before 31st March. Now, of course, one doubt may arise whether it is adjusting or non-adjusting event. Correct now? So, of course, even though check was received, even though check was having a date of 31st March or before 31st March, but the check was not under the control on 31st March. Therefore, it will not be adjusted on 31st March. Correct? Why? Because asset means any resource which are under the control of the entity. So this check was not under the control of the entity on 31st March. Therefore, it is a non-adjusting event. Correct? Now in exam, if you write non-adjusting event, you will not get marks. You will not get marks. You need to write down why it is a non-adjusting event. So if you relate with the definition of asset, then it becomes the correct answer as per the requirement of ICI. As per the requirement of ICI. Then case 3, I have said the check dated 31st March or before 31st March collected by collecting agent before 31st March. So can I say collecting agent is nothing but authorized person of the entity. So it become under the control of the entity only. Therefore, it will be an adjusting event even though not received by entity. Correct? Yes, sir. Then we have done one example of inventory. Inventory was measured at cost price or NRB, but after reporting date a fire occurred, inventory damage and NRB become 800. So of course this fire is a non-adjusting event because it does not relate to any condition existing on a reporting date. I think no doubt in this. Correct? Yes, sir. Then example number 6, I have said there was inventory whose cost price was 100, NRB was 80 and the value is equal to 80 and loss we have already recognized to the extent of 20. But before approval of financial statement, the inventory was sold at rupees 60. Can I see it provide further evidence of the condition existing on the balance sheet date that estimated selling price is not 80, estimated selling price will be 60. Therefore, we should value inventory at rupees 60, not at rupees 80. Therefore, it is an adjusting event. It is an adjusting event. No doubt about this. I think in example number 5 and example number 6, no doubt. Example number 5 and example number 6, no doubt. Correct? Example number 5, example number 6, no doubt. Example number 7, doubt may come. Example number 7, doubt may come ki I have said stock, there was some stock whose cost price is 700 and NRV was 1500. Therefore, in draft financial statement, we have valued at what? 700. Means no write down, no loss was recognized. But what happened? What happened? Due to obsolescence or whatever, correct now, the NRV of the stock become what? 600 before approval of financial statement. So whether it is an adjusting event, of course it is an adjusting event. Why? Because the information about obsolescence will be always available on reporting date. Any inventory will never become obsolete immediately. And can I say this is not a gap of 1 year or 2 years. This gap will be of 2 or 3 months only. I hope you are understanding. Correct now? This gap will be of what? How many months? 2 months or 3 months? It will not be a gap of 1 year or more than 1 year. Understood? Correct now? So any inventory does not become obsolete not immediately. I am saying suddenly it does not become obsolete. So that information will be always available with the entity. Therefore, the condition, of course, will be existing on a reporting date. Therefore, this will be an adjusting event. Understood? Have you understood this point? Any doubt? No doubt. Then example number 8, I have taken this example. I have taken once again from ICI StudyMed, ICI question of CA Inter. Popular question of institute. I think in CA Inter it has been asked 7 to 8 times. 7 to 8 times this question have been asked. Very popular question at CA Inter. Before reporting date, one of the asset, means property, plant and equipment, was agreed to be sold. Agreed to be sold. Correct? At rupees 8 lakh. And before approval of financial statement, registration was completed. Correct? So from my point of view, this registration is only legal formality. Only legal formalities. Only legal formalities, which is not to be taken into consideration for accounting treatment. Means any legal formalities will not be considered for accounting treatment, due to which principle? Substance over form. We do accounting based on substance, not based on legal document. So can you say when it is agreed to be sold, so control has been transferred? Control has been transferred, and once control has been transferred, can I say this property, plant and equipment should be derecognized from, derecognize means we need to pass the journal entry of sale. We need to pass the journal entry of sale. Recognize means we need to record it. Derecognize means we need to delete it from financial statement. Understood? So we need to derecognize from our financial statement as per Ind AS 16 coming soon. As per Ind AS 16 coming soon. Correct? Yes, sir. So can I say PP will be derecognized even if registration is not completed before approval of financial statement. Have you understood this point? Means registration is only a mere formalities, mere legal formalities, and we do not do accounting treatment based on legal document, due to what? Substance over form. Correct? This substance over form is the most important principle for accountant, chartered accountant. And can I say in CA Foundation you have done this principle, substance over form, but your teacher or whatever has only have given 1 minute or 2 minutes in this concept. But can I say entire accounting is based on substance over form. Entire Ind AS is based on substance over form. I always say apply your common sense. Common sense means apply substance. Substance means actual happening of the transaction. What is the actual happening that you apply? Whatever written in the contract is totally bakwas. Whatever written in the contract is totally bakwas. We never do accounting based on agreement or contract. Understood? Yes, sir. So yes, agreement done. So it gives an indication that control is transferred. But due to some agreement, it might happen control is not transferred. It is quite possible. The agreement done, but control is not transferred. We need to see the facts and circumstances of the particular case. Correct. Normally when agreement is done and question is silent, we always assume control is transferred. But if question is specify that control is not transferred, then of course, can I say control is not transferred, then also of course it is a non-adjusting event, correct? So what I have said in one more example, you can write down example number 9. Example number 9. If this is the case, 31st March, date of approval and before reporting date, proposed to sell property, plant and equipment, and either sale was completed before approval of finance statement or registration was completed, whatever it is. Correct now? So sale was completed before approval of financial statement. Sale was completed before approval of financial statement. Or we can also write down registration was completed. Registration for sale was completed before approval of financial statement. Correct? So propose to sale, whether control is transferred, whether on reporting date control of that property, plant and equipment is transferred to other party. No. So can I see it is an asset of entity only, therefore it should not be de-recognized even though sale was completed before approval of financial statement. So from this point we can understand this sale does not relate to any condition existing on balance sheet date, therefore it is a non-adjusting event. So it become a non. So I will say this question is based on Ind AS 10. This question is based on Ind AS 10. This question means previous example was not based on Ind AS 10. I hope you are understanding. Correct now? Are you able to understand? Yes, sir. So this is a non-adjusting event as control of such people was not transferred before a reporting date. On or before reporting date, you can say on or before reporting date. Correct? Understood? Correct now. Now one doubt may be answered, if some advance has been received, that is some other transaction. Some advance received for a sale transaction. Advance received is an asset or liability? Liability, so that is advance received. Will not de-recognize PP. So we are recognizing the cash received. Cash received means what? Cash account debit to advance. But will you de-recognize property, plant and equipment? No, will not de-recognize property, plant and equipment. Suppose proposed to sale, an entire amount has been received. Proposed to sale, an entire amount has been received does not mean the control has been transferred. Does not mean control has been transferred. Understood? Have you understood this point? But whenever any asset is proposed to sale, then it might happen that this property, plant and equipment is classified as held for sale. And whenever any property, plant and equipment is classified as held for sale, then we apply Ind AS 105 coming soon in your life. Ind AS 105 coming soon in your life. Correct now? So any property, plant and equipment may be classified as held for sale. So whenever it is classified as held for sale, then we apply measurement principle as per Ind AS 105. As per Ind AS 105. Right now we have not done Ind AS 105. So I can't discuss Ind AS 105 right now. But I will relate Ind AS 10 with Ind AS 105 when I will do Ind AS 105. Understood? Correct? So you just write down refer Ind AS 105. Why I am just mentioning this point? Because once the entire batch will be completed, you will start revision. So at this point of time, you will be able to understand why I have written refer Ind AS 105. Correct? Have you understood? Ind AS 105? Better. Have you understood example number 9? Then coming to example number 10. Example number 10. So I have taken some example for asset. Let us take some example for liability. So I just want to say that Ind AS 10 is applicable for both assets and liabilities. Correct now? It is not only for asset, it is maybe also for liabilities. So let us take some examples for liability. Suppose on 31st March, a legal case is pending and as per Ind AS 37, we have a recognized provision. Provision means we need to apply best estimate as per the information available on reporting date. Correct now? So provision, let us assume we have created provision of rupees 10 lakh. Correct? Provision of rupees 10 lakh. So don't ask me why 10 lakh. This is the best estimate done by management. You ask management better. Don't ask me why it is 10 lakh. But how we have understood how to measure the amount of provision. So when I have said provision means all three condition is satisfied on reporting date. All three condition means present obligation arising from past event, outflow of resource must be probable and reliable estimation can be made. Correct? Now what happened? Before approval of financial statement, there are three situations. Let me give me three situations. Case 1. What is case 1? Case is decided against company. Quite possible. Case is decided against company and amount of damages is rupees 12 lakh. Quite possible. It may be 8 lakh also. Correct now. Understood? But what we'll do? Adjusting, non-adjusting. Adjusting. I hope you are understanding. Adjusting. So what you will do? But adjusting means you will increase the amount of provision. Will not convert provision into liability right now. Correct now. It become actual liability on this date. And it was a provision on this date. So will you change provision to actual liability on 31st March? No. Understood? On 31st March, it was contingencies only. But can I say now we got the actual amount? Not, there is no requirement of estimation. If no requirement of estimation, better take actual amount. Understood? Therefore, it become an adjusting event. No doubt. Correct? Case 2. Case is decided in favor of company. Means no damages now. Quite possible there was a present obligation, means on reporting date there was a high chances that they may lose the case. But something happened. Something under the table happened. Bolo yes or no? It is quite possible in India or not? Quite possible in India. Correct now. So on 31st March, there was a present obligation, but then also case may be decided in favor of company. Correct? Yes, sir. But what will do? Adjusting, non-adjusting? Adjusting. Now I hope you're understanding. It may be favorable, it may be unfavorable. It may be favorable, it may be unfavorable. So this is also adjusting. Case 3. Now, a similar case, not this case, but a similar case was decided either against or in favor of company. Quite possible or not. So not this case, but a similar case. A similar case is decided in favor, better I am writing favor of company. In favor of company. A similar case. Now, a similar case is decided in favor of company does not mean this case will be also in favor of company. But can I say now present obligation will become possible obligation? Bolo yes or no? I hope you are understanding. No, not understanding. What I am saying, a similar case is decided in favor of company. Not this case. So a similar case is decided in the favor of company. So we can't say that now there will be no liability. Because the legal case is based on what? Based on court to court. Judge to judge. Correct now? So in one case it may be in favor, in other case it may be in against the company also. Because judges are different. Their viewpoint is different. Understood? But can I say now present obligation will become possible, present obligation will now become possible obligation? I hope you are understanding. So it is quite possible there can be two situations here. Two situations. Correct? Means either now outflow of resource is not probable or outflow of resource is remote. Yes or no? There can be two situations. Either the question will provide this information, otherwise you need to take assumption. What is the condition prevailing now? So if the outflow of resource is not probable, then what we should do? Then can I say provision will become now contingent liability on reporting date? Correct now? So this is also an adjusting event. This is also an adjusting event. Correct? So now disclose it as contingent liability. And if the outflow of resource is remote, then what? No treatment required. No treatment required means reverse the provision. Correct? So no treatment, no provision is required. No provision, no contingent liability, no treatment. So in both cases it is an adjusting event. It is an adjusting event. It is an adjusting event. So adjusting event means what? Adjusting event means when you are updating the disclosures also, it is an adjusting event. Means when you are updating the disclosure information, then also it is an adjusting event. Are bola re? Means there may be a situation that it is quite possible that on 31st March there was remote obligation. On 31st March there was remote obligation. Are bola re? So no treatment in draft financial statement, but a similar case was decided against the company. A similar case was decided against the company. Now there may be requirement of contingent liability disclosure. So when you are updating the disclosure information, then also it is an adjusting event. Are bola? So when you are updating the disclosure information, then also it is an adjusting event. You can't say that we are not passing journal entry, therefore it is not an adjusting event. Understood? So when you are updating the information for disclosure, then also it is an adjusting event. Are you able to understand? Correct? Have you understood? This example number 10 you have also understood. Means, right now I have taken varieties of example. Now let me take one question of CA final level. This all question, this up to example number 10, I used to do in CA Inter also. CA Inter mein I used to do this much example. Let me take one example of CA final level. And if you are giving me correct answer, it means now you become CA final. Otherwise you are in CA Inter only. Correct now. And I have confidence that you will give me correct answer. Correct? So don't break my confidence. This is 31st March. This is date of approval. Now, on this date, we have decided to close down one factory. Is question related to which concept? Restructuring. Very good. Is now I am combining Ind AS 37 with Ind AS 10. Correct? Then on this date, resolution passed. Resolution passed means there is a detailed formal plan. So it means there is a detailed formal plan for restructuring. Detailed formal plan for restructuring. Correct? Then, after 31st March, announcement made. Announcement made to the person affected by such restructuring. To all those persons who are affected by such restructuring, means employee, creditor, other person, banks, etc. Correct now. The announcement made. So you can see on 31st March, there was no announcement. But before approval of financial statement, there is announcement. Now we have done restructuring. So in case of restructuring, there is a constructive obligation when two conditions are satisfied. Do you remember? Do you remember? If you have forgotten, read it. Read it only. If you have forgotten, read it. You have the Ind AS Saransh book. Go to that page. Once again, read it. This is revision. When you think now you have forgotten some point, just go and look into it. Once you look now, everything will come in your mind. There is nothing to memorize. There is nothing to memorize. Just try to understand. When you forget some friend, then we call them now. We call them, then all the past, whatever we have done with that friend will come in our mind. Correct? Yes, sir. Now, from your point of view, batao, because announcement is done before approval of financial statement. Whether it is an adjusting event, when I am saying adjusting event means you recognize provision for restructuring on 31st March. When I am saying adjusting event, because on 31st March we have not recognized any provision for restructuring. And when you are saying adjusting event means we need to recognize provision for restructuring cost on 31st March. And when you are saying non-adjusting event, then no provision for restructuring cost is required on 31st March. Now you say adjusting or non-adjusting. Think and say, thoda think and say. Think and say. Always I say think and say, we are not in hurry. Because once you say, then you have next attempt then. Once you have written in exam, then next attempt might come. Better you should think and write so that next attempt will never come. Cool. How many are saying adjusting? How many are saying non-adjusting? 2 are saying non-adjusting, balance are saying adjusting. And there are many students who are not raising their hands. So next time you are not raising hand, I will not give any importance to you. Correct? So those who are saying non-adjusting, why you are saying non-adjusting? %100% correct. You can see in K discussion, always correct answer means minority. Because most of us only see the information. We don't apply the information to related concept. And same thing will happen in exam. Same thing will happen in exam. You can see what Ind AS 37 says. Ind AS 37 says constructive obligation arises when two conditions are satisfied. Two conditions are satisfied. On which date? On or before reporting date? So can I say here, just try to understand, entity has a detailed former plan, but no announcement has been done on 31st March, means there is no constructive obligation. If there is no constructive obligation on 31st March, can you recognize provision for restructuring on 31st March? Means it does not relate to any condition on balance sheet date. It relates to a condition arising after balance sheet date. Means due to public announcement, constructive obligation arises on this date, na? Constructive obligation arises on this date. There was no constructive obligation on 31st March. There was no constructive obligation on 31st March. Are bolna re? Therefore, it is non-adjusting event. Non-adjusting event. Why? Write down why. Because both the conditions were not satisfied on 31st March. Therefore, there was no constructive obligation on 31st March. In exam, if you are writing only non-adjusting event, you will not get marks. Huh? You write down the para of Ind AS 37, then relate with the para of Ind AS 10. That you can write down. Very good question, and this is super expected in exam. Super expected in exam. I'm getting correct answer from live batches. Understood? Correct? Then one more example. Apply your common sense. Correct? Apply your common sense. You know about gratuity? I think you have done somewhere under income tax. Not in accounting, because AS 15 was not in our syllabus at CA Inter. So gratuity you have done under income tax. Achha, gratuity is paid on which date? Gratuity is payable to employee during services or after retirement? After retirement. So gratuity is paid on retirement due to what? Due to past services? Due to past completed number of years? So due to past services, correct? I have just given hint. I have just given hint so that you can answer as per Ind AS 10. Otherwise, I should take this example after AS 19. But when I will do Ind AS 19, I can't relate with Ind AS 10 because Ind AS 10 is already completed. Understood? Correct? But now you know gratuity? Correct. Yes, sir. Now apply your common sense. Okay? Now, on 31st March, as per Ind AS 19, don't ask me why right now because we have not completed Ind AS 19. As per Ind AS 19, we have recognized provision for gratuity, correct? And provision for gratuity will be recognized at some defined rate, or it may be also given by government based on government rate, correct? Now understood, as per government calculation, whatever calculation Your formula is given by Act. Correct na? Yes sir. So it is already recognized. But before approval of financial statement, government has revised the gratuity payment. Is quite possible. Quite possible. So before revision, it was 10 lakh. Means in draft balance sheet, we have recognized a provision for gratuity at rupees 10 lakh. And due to revision, it become 12 lakh. Quite possible. Quite possible. But adjusting, non-adjusting. Adjusting, non-adjusting. I'm not getting, sir. Only 2 or 3 students is saying. Adjusting, non-adjusting. Even though you have a wrong answer, you should say wrong answer in confident way. CA means what? CA means whatever they say in confidence so that other person think it is only correct. You know, CA means what? CA will never say no to their client. Even though they don't know, they say, yes, I know. If someone is coming to me for costing subject, will I say I don't know costing? Are bolna na, believe me, I don't know costing. But you ask me some question, I will say, idam easy, come tomorrow, I don't have time tomorrow. And what I will do? I'll go and read and then come tomorrow, I will say. But I will never say what I don't know because I am chartered accountant. Understood? So CA means they will never say no. Even though you don't know answer. Or better say, come tomorrow, sir. Okay. So can I say, how many are saying adjusting? How many are saying non-adjusting? Chalo, now reverse situation. It is an adjusting event, nalayak. It provide, there was condition. We have already recognized. I said just try to understand. We'll give fair information to the user of financial statement. Oi, nalayak. What is just in mind, say we are here to give fair information. You only say 10 lakh will be fair or 12 lakh will be fair information to the user of financial statement. Now you know the amount payable is 12 lakh. As per the revised formula. As per the revised formula. Correct? Understood? Don't become emotional here. Correct? Don't become emotional. Sir, no sir. We are not knowing fact on 31st March. This is what CA enter. CA enter used to think in this way. There was no fact available on 31st March. Bolo yes or no? And on that basis used to apply adjusting or non-adjusting. Totally bakwas. I don't understand why we say there was no fact. Fact is there. Provision already created. Condition is there. Correct now? It become an adjusting event. It become an adjusting event. Now, can I ask one practical question? It will never be asked in exam from my point of view. Let's see how you deal practically. And it might happen such case might have come in your office. Might have come. Let's see what you'll do in that situation. Please become chartered accountant right now. You are chartered accountant. You are the best chartered accountant of India. Correct? I am the best faculty of India. In this, there is no doubt. No doubt about. I have no doubt. You may have doubt, but I have no doubt about me. So whether you have doubt about yourself? Are bolna re. So if you have no doubt, what you should do in your real life? Every morning, the first thing what you should do, you should go to the mirror. You should go to the mirror and watch your face and say, let's see. Person who is standing in front of me, the best CA. And repeat 2 times that I am best chartered accountant, I am best chartered accountant. Pakka you will become chartered accountant. Have you done this thing in your life till now? Not done? So tomorrow you will do. And you will feel that confidence will come in your life. A positive thing will come. A positive thing will come. You will meet CA, you will become CA that time. And you started discussing everything about CA only. Correct? So you are best chartered accountant. If you are best chartered accountant, a CA must have what? A CA must have what? Any CA must have visiting card. You know visiting card? I think if you have met any CA, the first thing CA what they do, they will give their visiting card. Have you met any chartered accountant? Not me, because right now I am a faculty here. I can't give my visiting card to you, but you come to my office, I'll give what? For work. Are bolna yes or no? So every CA have what? So you are also what? So you must have what? So when you will give me your visiting card? When you will give me visiting card? Very soon. When it is very soon? Very soon means within a week. I am giving you 7 days time. I want your visiting card. And those who are listening my classes live or recorded, you can post me. I am waiting for your what? Visiting card. And if you are not giving, or if you are not designing your visiting card, means till now you are not confident about yourself. You are not confident. Correct ना? बोलना एक अलग बात होता है, करना एक अलग बात होता है. हिंदी में बोल दिया, whatever you say, you must do it. Otherwise don't say. Whatever you say, you must do it. Otherwise don't say. So right now you have said you are not chartered accountant. A low sound. Right now what you have said, you are best chartered accountant. So when you will give me visiting card? In 7 days. Next Sunday with visiting card. Okay? Are bol yes or no? Yes sir, I want. Okay? Example number 13, I want correct answer from my chartered accountant. Yes sir. Just try to understand. I'm your client. Correct? Date of approval. What happened? I have issued a check of rupees 1 lakh to one of the creditor or supplier, to Mr. X, my creditor. So, but what journal entry I will do? Journal entry what I will do? My creditor will decrease. Creditor account debit to bank. Means we have passed this journal entry. Correct? Yes, sir. But before approval of account, what happened? Check was dishonored. Quite possible. Rare situation, huh? Rare, very rare situation. Check dishonor means dangerous. But quite possible. You can't say it is impossible. Check is dishonor. Understood? So before reporting date, we have already issued a check and we have passed one journal entry, creditor account debit to bank. Before approval of financial statement, check was dishonor. So when check is dishonor, we reverse the entry. Now the question is that we reverse the entry when? On 31st March or on this date? Means it is an adjusting event or non-adjusting event. When you are saying adjusting event, means we need to reverse on. When you are saying non-adjusting event, means we reverse, but on this date, means after reporting date. We need to reverse. There is no doubt about this. We need to reverse. But whether it is an adjusting or non-adjusting event, apply your common sense. Apply Ind AS 10. Ind AS 10 means common sense. Adjusting, non-adjusting. What you will do as a chartered accountant? How many are saying adjusting? How many are saying non-adjusting? Correct. Those who are saying adjusting, can you give me reason why you are saying adjusting? Reason? Of course, reason is required. Because I am your client, I will say, why, Baba? Good. There was a condition existing on balance sheet of what? Of dishonor. If I say there was no idea, then suppose on this date there was use balance. This is 1 lakh na. There was a 2 lakh balance. Then also it can be dishonored. Then also it can be dishonored. Then it is an adjusting or non adjusting. Then also adjusting. Huh? Anyone is still saying adjusting? How many are saying adjusting? You are saying adjusting? 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 Others are saying what? Non-adjusting? So, my answer is that is adjusting. 100% correct, adjusting. So, those who have said non-adjusting, you have once again not applied your common sense. Please don't think whether fact is available or not. I have already applied your common sense. Just try to understand. It is dishonored. Can you say management is responsible for maintaining the sufficient fund on 31st March as well as on the bank balance up to the date of payment? Correct now. Then to what everyone will do, everyone will issue check on 31st March, my liability will decrease and then we reverse it. So on 31st March, we will try to decrease our liability. Are bolna yes or no? When we will decrease our liability, our net worth will increase. Are bolna yes or no? So then everyone will do like this. Are you getting what I am saying? So can you say, if the check was dishonored, that condition was existing on balance sheet date, even though information of dishonor was not known to the management. Once you have issued a check, the balance should be maintained in the bank account. Balance should be maintained in the bank account. And I hope this type of entry you might have done in your office. But normally check is not dishonored in your office for your office client. Correct now. But check is dishonored, so of course it is an adjusting event. And you need to reverse the journal entry on 31st March. Means increase liability. Increase liability on 31st March. On 31st March. Understood? Correct? Even if information of dishonor was not known to management on 31st March. Even if information of dishonor was not known to the management on 31st March. Correct? Because on 31st March, the condition was that they should maintain sufficient fund in bank account. Understood? Yes, sir. But if suppose, the check means after 3 months check become invalid. Correct now? So it might happen the supplier has not deposited check within 3 months, so it become what? Stale. It becomes stale as per RBI rules. Correct now. So it is quite possible the check becomes stale. Then adjusting or non-adjusting? If the check becomes stale, it is an adjusting or non-adjusting? Adjusting. Just try to understand, check becomes stale due to mistake of what? Creator. The intention of management was to pay only. And can I say once check becomes stale, what entity will do? They will issue new check. It does not mean they have no intention to reduce the liability. Just try to understand. You are not able to understand what I am saying. Apply your common sense. You are applying not common sense. Example number 14. One more example. 31st March. I am saying apply your common sense, but you are not applying your common sense because you don't have the common sense, or you are not using common sense from last 20 years. Correct now? Date of approval. What I said, same thing. check was issued and it was not deposited and the check become still means invalid. So why it become invalid? Because the creditor has not deposited the check in the bank account, in their bank account. So it is the mistake of our creditor or the entity. Entity has an intention to pay. Entity has an intention to pay means once it becomes stale, they will reissue the check. Are bolna re? They will reissue the check. Only that is the point. So of course, here suppose reissued the check. Reissued the check. It does not mean you need to reverse and you need to pass journal entry once again. It is a non-adjusting event because intention of management was to pay only before 31st March. Before 31st March and it becomes stale due to the mistake of what? The creditor understood. Therefore, it is a non-adjusting event. It is a non-adjusting event. Understood? Non-adjusting. And this will come in bank reconciliation. Why we prepare bank reconciliation? Because of this reason only. We prepare bank reconciliation because of this reason. Correct. Fine. One more question. Let me find out whether you know bank reconciliation or not. But in balance sheet, we write balance as per cash book or balance as per passbook. We write balance as per cash book or balance as per passbook. If cash book or passbook? Cash book. In balance sheet, we write down balance as per cash book or passbook? Cash book only na. So can I say whether they are depositing or not depositing, that does not matter. We write down balance as per cash book only. Understood? Correct. And whatever difference arises, for that we prepare bank reconciliation statement. Understood? Correct? Thank you very much. One answer was correct. Balance as per cash book. Have you understood? I think most of the example I have taken, now you need to read the question from question bank and you need to answer. I will not take question from question bank for this chapter because in this chapter what I feel, if you do then only you will improve. If I am doing, you will not be able to understand. I have taken 14 example only to inform you that what you need to apply while answering. Correct? Yes sir. Understood? Yes sir, we have understood. Come to examples of adjusting event. There are some examples given under Ind AS 10 only, that examples we are repeating. These examples are important from examination point of view. Examination point of view. The settlement of a court case after reporting period. Already I have done adjusting event. Adjusting event. The bankruptcy of a customer that occur after reporting period. Already I have done. Bankruptcy of a customer. Correct. The sale of inventory after reporting period may give evidence about the NRV at the end of reporting period. Already I have taken example. All these examples I have taken. The determination after reporting period of the amount of profit sharing or bonus payment, gratuity. Bonus also can be taken as an example. The bonus payment to employee. When we pay bonus, bonus is based on profit and profit is calculated only after reporting date. Bole yes or no? This is also an adjusting event. Yes sir. The discovery of fraud or error that shows that financial statements are incorrect. So any mistake which has been found due to audit by an auditor during this period is an adjusting event. That errors are rectified. So that is also an adjusting event. Because of that reason we do audit now. So error found after balance sheet, after reporting date, but before approval of financial statement, need to be rectified on 31st March. Need to be rectified on 31st March. Due to Ind AS 10 only. Due to Ind AS 10. Examples of non-adjusting event. Decline in the market value of investment. Decline in the market value of investment. Just try to understand, market value and NRV are different. Market value and NRV are different. NRV means estimated selling price. Market value means market value on reporting date. So when we say investment should be measured market value, so as per Ind AS 109 coming soon in your life, that investment should be carried at fair value or market value on reporting date. So subsequent increase or subsequent decrease is not an adjusting event. Correct now? Any subsequent increase or subsequent decrease that is related to condition after reporting date. Understood? That is related to condition after reporting date. NRB is different. NRB means estimated selling price. Correct? At what price it can be sold. Understood? And sale will be done after reporting date only. Are you getting what I am saying? Yes, sir. So decline in the market value of investment is a non-adjusting event. In this, normally students do mistake. Due to emotions. Due to emotions. Correct? Understood? Correct? Yes, sir. Major business combination, any amalgamation, absorption after reporting date will be a non-adjusting event. So any business combination means amalgamation, merger, acquisition, etc. after reporting date will be always what? Non-adjusting event. Even though negotiation has been done before reporting date, reporting date. Understood? Yes, sir. Announcement of plan to discontinue an operation. I have taken an example. Announcement of a plan to discontinue an operation. Announcement after reporting date will be a non-adjusting event. This is all are important from examination point of view. Major purchase of asset. Any asset which you are purchasing after reporting date, will it be an adjusting event? No. Correct now? Yes, sir. Classification of non-current asset as held for sale after reporting date. Already I have said refer what? I don't refer Ind AS 105. This I can't discuss right now. Because we don't know Ind AS 105. So this point I will take when I will do Ind AS 105. Automatically it will be covered. Yes, sir. Changes in foreign exchange rate. You have done AS11 you have done monetary item. You know monetary item. What is monetary item? I will ask or I will not ask? I should ask or I should not ask? Monetary item. What is monetary item? I have not understood. Raise your hand, Baba. What you are saying? Which can be estimated. Which can be received. Received or receivable. So, I have understood, but this is not the complete meaning of monetary item. We'll do monetary item under Ind AS 21. Or, of course, we'll also discuss under Ind AS 38 coming soon. Correct? Yes, sir. So, monetary item, whatever you have said right now, receivable or payable, okay, chalega. But as per AS11, you have done that all foreign currency monetary item will be translated by using closing exchange rate. So, any subsequent changes in foreign exchange rate is not at all relevant. That is non-adjusting event. Changes in forex rate. Yes, sir. Major litigation after reporting date. Any litigation after reporting date. Settlement not. Any litigation after reporting date. There was no condition on reporting date. Therefore, it is a non-adjusting event. These are the examples. Yes, sir. Correct? One doubt has been asked. Sir, please give me an example for this example number 10, sir, whether it can be a non-adjusting event. Give me an example where it will become a non-adjusting event. Correct now. Whenever a case is decided, just try to understand. Whenever a case is settled before approval of financial statement, it will be always adjusting event. Whether it is decided in favor or against the company, it will be always adjusting event. It cannot be non-adjusting. Yes, if the case is decided after approval of financial statement, I will say it is not covered in this chapter. I will say it is not covered in this chapter. So when I say settlement of any case before approval of financial statement, it will be always adjusting event. Either to increase or reverse the provision. Correct? If any litigation occurred after 31st March, it is a non-adjusting event. Understood? Yes, sir. Doubt over? Yes, sir. Doubt over. Now we'll come to the some important discussion regarding this chapter, special case. Special case. Correct? So there are how many special case? 3 special case. Let us discuss. First is long-term loan. First is long-term borrowing. So we are doing special case. If you have some example, that also you can ask me. If you have some doubt regarding CA Inter or whatever example is coming in your mind, you can ask me. I will take that also as a case. Correct? Nothing to worry. So we are doing a special case. Correct? Now, first I need to explain what Ind AS want to say. This is a reporting date. Suppose before reporting date, an entity has taken a loan for 5 years of rupees 5 crore. Correct? Now, as per the terms and condition of the loan, if there is any breach of loan agreement, as per the terms of loan given by the bank, if there is any breach of loan agreement, if there is any breach of loan agreement, correct? So loan will be payable on demand. Loan will be payable on demand. Means the bank can demand loan at any point of time and the entity need to pay even though it is a loan for 5 years. So means right now, can you say right now it is long-term borrowing? But due to breach, it may become what? Current liability. Correct now. So right now it is non-current liability. NCL means what? Non-current liability. When I am writing NCL, and if you don't know NCL, better you write a non-current liability. Otherwise at a time of revision you will think what is NCL. And you will search Google Baba, some other meaning will come. NCL means non-current liability. Okay? But due to breach, can I say loan will become payable on demand and it will be classified as current liability? Now, what is current liability? What is non-current liability? I may ask this also. I can ask from you, but I will not ask. I will not ask. I know you don't know. I know you don't know. Whatever you know, that is only a small definition. You will say anything which is payable within, after, maja aayega. Correct? But can I say this current liability and non-current liability definition is also covered in CA Inter syllabus, but I found that teachers are not teaching that also. Have you done the meaning of current liability and non-current liability? Apart from whatever I have said, 12-month wala point. You know the exact meaning of current liability and non-current liability which is given in Schedule 3 of Companies Act? Have you done that? No done. Means whatever you have done at CA Inter is only from exam point of view has been done. Because the institute is not asking, the teachers are not teaching. But when institute will ask, what will happen? Means as per ICI, the paper is super easy. Super easy. They ask only what they want to ask. Correct na? If they ask entire, they started asking everything na, so it become tough. Then it will become tough. Non-current liability, current liability definition will do, don't worry. Correct. But you know non-current liability which is payable after 2, that definition you know, that we can apply. Now, whenever it become payable on demand, it will be always current liability. It will be always current liability. Understood? Yes, sir. Now, what happened before reporting date? There was a breach of loan agreement. So can I say because already there was a breach, now the loan will become non-current or current? Now it become current. Means on reporting date, in draft financial statement, it will be a current liability. It will be a current liability. Understood this point? On reporting date, because already a breach occurred, due to that breach, can I say the liability become current liability because bank may demand at any point of time? Yes, sir. But what happened before approval of financial statement? Before approval of financial statement, bank agreed not to demand. Quite possible. Not to demand. Means entity went to the bank, has done some negotiations. Correct now, and bank say okay, will not demand. Quite possible or not? In India though it happens. Correct now, because of that reason, the case of what? Vijay Mallya, everything happened. Correct. Banks are not so much strict in India. Correct? Yes, sir. So bank agreed not to demand before approval of financial statement. Now the question is that on reporting date, the liability will be non-current or current. If you are saying current, it is a non-adjusting event. If you are saying non-current, it is an adjusting event. Bolo yes or no? Correct. Means due to this event occurring after reporting date but before approval of financial statement, the question is that this liability will be current liability or non-current liability on reporting date. Correct? If you are saying current liability, then it is a non-adjusting event. Are bolna re? If you are saying non-current liability, it is an adjusting event. I hope you are understanding what you say. It is an adjusting or non-adjusting? Adjusting or non-adjusting? How many are saying adjusting? How many are saying non-adjusting? We got two answers. Once again we are getting two answers. Means in exam, what will happen? Super easy chapter. But then also we are not getting correct answer. Something is lacking. Something is lacking. Think conceptually. Now what should happen? Bank agreed not to demand. As per fair information, just think of, if you want to give fair information to the user of financial statement, think in that way. I am always saying don't think about the fact existing on reporting, that think about a fair information. What fair information should be given to the user of financial statement as per that. Correct? So what you should do? It should be shown as current liability or non-current liability on 31st March. Non-current, how many are saying non-current? How many are saying current? Non-adjusting, answer gone. What happened? Don't be confused. Take whatever you are saying if you think it is correct. How many are saying non-adjusting once again? No one is saying non-adjusting? Everyone is saying adjusting? So, adjusting is correct. It will be non-current liability. Why? Because bank agreed not to demand. But it is an adjusting event as per Ind AS 10. And we are doing Ind AS 10 only. But as per International Accounting Standard, is IAS 10. When I say IAS, it is International Accounting Standard. As per International Accounting Standard, it is non-adjusting. Means in this case, if you are saying non-adjusting, then you are international student. You are thinking international. And this is what one of the carve out. Carve out, do you remember? Carve out. Carve out. One of the carve out. So whether carve out is in our syllabus? As per the content given, no. But as per the study material, if you see, they have given carve out in the study material also. However, from my point of view, carve out is not in our syllabus because it is a part of GFRS. They should not ask, but we don't know ICI. Because it is given in the study material of ICI, they may ask. Understood? Correct? So there are very few carve out, don't worry. You will be able to remember. Correct now. Nothing to worry. So as per Ind AS 10, it is what? Adjusting event, and it is a non-current liability. As per International Accounting Standard, it is what? Non-adjusting event, and it will be shown as current liability on reporting date. Are you getting whatever I am saying? Correct? Now, if institute ask a question of this nature and question is silent about IAS or Ind AS, what will be your answer? Adjusting or non-adjusting? You should give as per Ind AS, not as per International Accounting Standard. And don't write this as per International Accounting. Don't show your extra knowledge. Correct now? Because it might happen they also don't know. Because they will refer suggested solution. And in suggested solution, the answer will be like, for as per what? As per Ind AS 10. Understood? If question is silent, always in FR exam will follow this. Correct? But one doubt will arise of why it become non-adjusting international. And because we have copied paste International Accounting Standard, why we are considering it as an adjusting event? Just try to understand what as per economic condition. I say this carve out is as per economic conditions. Correct now? So when we were conversing from IAS to Ind AS, the government think that in India banks are not so much strict. Internationally banks are very much strict. Internationally banks are very much strict. Means internationally once there is a breach, there was no condition of this removal. Understood? Just try to understand. What the government think about this? As per International Accounting Standard, there was no condition of this waiver. Because banks are very much strict. Means this is very rare situation internationally. This is very rare situation the bank will agree not to demand. Internationally banks are very much strict. Means the condition of waiver was not existing on reporting date and therefore it will be shown as current liability. But in India, banks are not so much strict. We know as per the case happening in India, all the frauds are because of this. Correct now? So banks are not so much strict, means it might happen the condition of waiver is existing on reporting date, and if that is waived before approval of financial statement, it meet the condition existing on the balance sheet date, and therefore it will become what? Adjusting. So this is carved out due to economic condition prevailing in India. Due to economic condition prevailing in. Understood? Correct? Understood? Because in India it is not possible demand loan from any person. And if they will demand, they will say solvent. Whatever you want to do, do. Correct now? Understood? It is impossible that bank can demand. Even though they are demanding, the other party will not pay. So bank will try to negotiate. Bank will try to negotiate. Understood? Yes, sir. So that is only given. Let's see what is given. Long-term loan. Whenever there is a breach of material provision, whenever there is a breach of material provision, so what the Ind AS want to say, if there is a breach of any immaterial condition, then so it will be always non-current liability. Immaterial condition means suppose some document has not been submitted, so this is a very immaterial point that will be submitted. But if there is a breach of material provision, something need to be done that is not done. Correct now? Means profit report need to be submitted, but they are not submitting the profit report. It means that become a breach of material provision. Correct? Yes, sir. Whenever there is a breach of material provision in case of long-term borrowing on or before reporting date, means breach already occurred before reporting date, with the effect that such loan become payable on demand, that is current liability on reporting date. Such loans shall be classified as non-current liability, means adjusting event. Such loan will be classified as non-current liability if the lender, means bank, agree not to demand before approval of financial statement. Understood? Correct? Have you understood this point? Means breach of contract on or before reporting date, minor default. This is a minor default, ignore. Can I say it will be non-current liability on reporting date only? Then this para is not applicable. It is a minor default, then it will be non-current liability on reporting date. Correct? Yes, sir. So it is a non-current liability. But if there is a major default, so it becomes current liability on reporting date. But if the lender agrees not to demand before approval of account, then it is a non-current liability. In other case, if bank have not agreed, then it will be what? Current liability. Have you understood this point? Carve out. As per International Accounting Standard 10, even after reporting date, rectification of any breach. Rectification of any breach means which breach? Material or immaterial? No, both. Any breach. They are very much strict. They said any breach. You need to think what the word has been given. They have not written material breach. Any breach means including what? Including immaterial. Correct? So rectification of any breach after the end of reporting period will be always what? Always what? Non-existing. But this, whether they will ask this type of question, that we don't know. Correct? Understood? But from examination point of view, this is important. But in this write down, we'll once again discuss this part under Ind AS 1. Refer Ind AS 1 also. Refer Ind AS 1 also. Correct? Understood? The first special case you understood? This is important from examination point of view. Second case is going concern. Going concern, already it was covered where? Yes, well, let me take one example. Apply your common sense. Okay, 1 second. So we are doing special case number B. Correct? This is 31st March. This is date of approval. Means on 31st March entity was a going concern. On 31st March entity was a going concern. But something happened. A fire occurred. Huge loss, which was not insured. Not insured. This type of information will be given. And for this two word information, they will make 3 para. They will create one story. Only to waste your time, to deviate you. The context will be this only. My question to you all, adjusting, non-adjusting. Fire occurred, use loss, not insured. Adjusting, non-adjusting. Adjusting? You are saying adjusting? How many are saying non-adjusting? Everyone saying adjusting? Why it is adjusting? Huh? Why you are saying adjusting? Anyone say why you are saying adjusting? Huh? No, you are saying might affect. Might affect and affect has 2 different meanings. Might means what? Fire occurred. I have not said that they have intention to liquidate right now. Loss occurred does not mean we will die. Loss occurred does not mean we will close down our entity. Means right now, you should ask me before answering, sir, whether going concern is affected. Means once again you have answered without thinking. Just try to understand. Now you are CA Inter student. I said you need to become from CA Inter, you need to come to CA final. Right now you are in CA Inter only. Question given, padak answer, adjusting. And you are saying adjusting because your teacher has said adjusting that time. You are not applying your common sense. Whether I have said going concern is affected, I have said use loss not insured. Only 2, what confuse you? Even though use loss occurred, not insured, I will continue, I will fight now. Correct? If some student failed in one of the exams, CA final exam, going concern affected. He will say no, quit, and no, never write. अरे बोलना रे, I will fight रे. बोलना yes or no? Correct? So how can you say going concern is affected? How can you say going concern affected? Means before answering you should ask me, sir, whether going concern affected. Then you become CA final student. Correct? Start questioning, not answering. Start questioning. Means, auditor are suspicious. Thing in audit you have done, but you are not getting that type of quality. You should be suspicious. Asking question pe question. Then you should derive one conclusion. Correct? Please. Now I will say there can be two cases. Means if question is silent, I will say give both the answer. If going concern affected, this. If going concern does not affected, this. So if going concern affected, then what will do? If going concern is not affected, so can I say if going concern is not affected, then it is a non-adjusting event? Then no doubt. Non-adjusting event. Only a disclosure is required if the amount of loss is material. Correct? Means there is a huge loss, so amount is material. So a disclosure is required. Are bolna re? Yes, sir. But if going concern affected, you said adjusting. What do you mean by adjusting here? What do you mean by adjusting here? All the values of NRB or only NRB? Adjusting means what? One thing is clear, adjustment is required. But here adjusting means the entire financial statement will be redrafted on a non-going concern basis. Means, can I say right now the draft financial statement is prepared, already prepared now. Based on what? Based on GC. Based on GC means by applying all Ind AS. All the Ind AS has been applied. Means whatever accounting treatment is given in respective Ind AS, that is based on going concern. Means Ind AS 2 says cost price or NRB whichever is lower, that is based on going concern or non-going concern. Ind AS 2 says, after this we'll do Ind AS 2 only. Ind AS 2 says inventory should be valued at cost price or NRB whichever is lower, based on going concern or based on non-going concern. Based on going concern. We'll do Ind AS 16 property, plant and equipment. You have done AS 10 revised. They said that property, plant and equipment will be subsequently recognized either by applying cost model or revaluation model. You have done? As per going concern or non-going concern? Going concern means Ind AS gives accounting treatment based on going concern. Correct? Means already we have prepared draft financial statement based on going concern. Correct? But now when you are saying adjusting means what? We need to redraft the financial statement based on non-going concern. Based on non-going concern. And for financial statement preparation based on non-going concern, there is no specific Ind AS. Correct now? So in this case, what we do? We value all the assets and liability based on their realizable value. Means all assets and liabilities will be recorded will be recorded at their realizable value. At their realizable value. Understood? Correct? However, if you read AS4 has not said anything about this. AS4 is silent regarding this para. But practically we do this only. AS4 says that financial statement require adjustment. Only this much. Only this much. AS4 says financial statement require adjustment if the going concern is affected. But they have not said anything about preparation of financial statement. But can I say we need to adjust in this way because we are not applying going concern, now we'll apply non-going concern. It means we need to prepare financial statement based on liquidation basis. Because now we have an intention of liquidation. If you have intended to liquidate, means you want to sell your assets and settle your liability, and you will sell your asset at realizable value only. So whenever there is an intention to liquidate, till now we have not liquidated, but we have an intention to liquidate, our financial statement will be prepared based on liquidation basis, non-going concern basis, means at a realizable value. It means, can I say, we need to change the basis of preparing our financial statement? We'll change the basis of preparing our financial statement. Let's see what India's 10 says. But I hope you have understood this. Have you understood? Means what I want to say, if question is silent, give both the answer. Unless question has specified that going concern is affected or not affected. Understood? Correct, yes. Then see, let's see what is given under India's 10. An entity shall not prepare financial statement as per going concern. Understood? An entity shall not prepare financial statement as per GC if it intend to liquidate, till now not liquidated. If there is an intention to liquidate, entity, not component of entity. Is if a factory is closed down, that is not the going concern is not affected. Entity means in total they have decided to liquidate. Correct? Yes, sir. An entity shall not prepare financial statement as per going concern if intend to liquidate or ceases trading. Or ceases trading means they have intention to close down all their operation activity without going into liquidation. It is also quite possible. It is also quite possible. Or has no realistic alternative but to liquidate. Means they have no intention but they do not have any option other than what? Liquidation. Correct now? They have no option other than what? Liquidation. For example, you know old syllabus CA final, new syllabus CA final. In new syllabus they have introduced one paper 6 elective paper. But in old syllabus, instead of elective paper, there was one subject which was known as Information System Control and Audit, ISCA. Know about ISCA? That was totally dangerous subject from CA final student point of view. CA final student used to fail because only of what ISCA, and that subject has been removed, was saved. Believe me, out of 8 paper, I used to only think that if I pass in ISCA, I will become CA. I used to think in this way, if I pass in ISCA, I will become CA. ISCA, though don't used to understand anything because I am not taking coaching classes. That time it was not available also. All things read by me and all was overread. No, we are not so much technology that we were not knowing anything about technology that time. And it was totally based on technology. We only used computer in our office. And in our home also there was no computer. There was no smartphone also that time. No phone only that time. There was landline. Understood? Correct. So ISCA, I used to think ISCA pass, CA become. Correct? So, can I say what happened? Due to change in the syllabus from old syllabus to new syllabus, the teacher who were teaching only ISCA, what happened to them? They do not have any other option but to stop teaching. बोलो yes or no? Correct ना? तो there were many इसका teacher who were non-chartered accountant. They can teach only what? इसका. So that affected their going concern. Or can I say, suppose we are in plastic industry and government put restriction on plastic industry. So we do not have any option, only one option left, that is what? To liquidate. Correct? So it intend to liquidate or ceases trading or has no realistic alternative but to liquidate. It means our going concern is affected. If the going concern assumption is not appropriate, that is, it become invalid after reporting date. Ind AS requires what they say, a fundamental changes in the basis of accounting. Means Ind AS 10 has used the keyword fundamental changes in the basis of accounting. This was not used under AS 4. Means difference between AS 4 and Ind AS 10. AS 4 only used to say adjustment is required, but practically whatever we used to do in AS 4, that only we'll do in Ind AS 10. Correct now? Means fundamental change in the basis of accounting means what? We need to prepare financial statement based on non-going concern basis. Correct? Ind AS require fundamental changes in the basis of accounting rather than adjustment to financial statement. What AS4 used to say? Adjustment to financial statement. But Ind AS 10 says fundamental changes in the basis of accounting. It means if in exam you write down adjusting event, whether they will give marks. If you write only adjusting event, whether they will give marks, no. You need to write down here adjusting means a fundamental change in the basis of accounting. This is the keyword. This is the keyword. Understood? Fundamental changes in the basis of accounting means financial statement should be prepared on non-going concern basis. Understood? Have you understood this point? So as per Ind AS 10, we will redraft the financial statement based on non-going concern basis. Correct? What Ind AS 1 says regarding to this, what Ind AS 1 till now we have not started. What Ind AS 1 says, Ind AS 1 require following disclosure if financial statement are not prepared on going concern basis. Means whenever we are preparing financial statement on non-going concern, Ind AS 1 require disclosure, not Ind AS 10. Ind AS 1 require disclosure. Ind AS 10 only says you need to prepare financial statement based on non-going concern basis. Ind AS 1 says whenever you are following non-going concern basis, these three disclosures are required. First, the fact, why you are non-going concern. Then basis of preparing financial statement, at what basis you are preparing financial statement required disclosure. And reason why the entity is not regarded as going concern. Reason why the entity is not regarded as going concern. This disclosure is as per Ind AS 1. Understood? Correct? Means even after reporting date, if going concern remain valid, then non-adjusting event disclosure required if the amount of loss is material. If going concern is not valid, adjusting event, of course adjusting event, it means fundamental changes in the basis of accounting is required. This is the keyword. Keyword understood? Bolna re? Yes sir. Disclosure is required as per Ind AS 10. Disclosure is required as per Ind AS 1. Ind AS 1. So if question has been asked for disclosure, don't write as per Ind AS 10, as per Ind AS 1. As per Ind AS 1. Understood. Simple. आगे चले. Last special case for Ind AS 10 is proposed dividend. I hope this you have done in AS 4. No discussion required. Proposed dividend. ये बोलना रही. What journal entry we do for proposed dividend? What journal entry we do for proposed dividend? Only on receipt. I am not asking from shareholders' point of view. I am asking from entity's point of view. Proposed dividend, what is the journal entry? अरे बोलो. What is journal entry for proposed dividend? proposed dividend, PL account debit to PL account or PL appropriation? PL account or PL appropriation? PL appropriation account debit to proposed dividend. Correct? Are bolna re, you are not saying. Chalo, let me explain. Then I think you might understood what was done under AS4. Correct? This is the reporting date. This is the date of approval. Correct? Now, can I say draft financial statement will be prepared? Correct? A draft financial statement will be prepared, then auditor will come, will audit the books of account. Correct? Then at this point of time, board of directors meeting will be held. Board of directors meeting will be held. And before approving financial statement, they will propose a rate of equity dividend based on profit. Correct? Means they will propose a rate of dividend for equity shares before what? Approval of financial statement. Correct? Before approval of financial statement, we suppose this is which year? 2020-21. So this proposal is for which year? 2020-21 only? 2020-21. Understood? So matlab hai na? Now, it is an adjusting event or non-adjusting event? Non-adjusting or adjusting? Adjusting, non-adjusting? Non-adjusting now. So when I have asked what journal entry, you have given me journal entry. Okay? I have asked what is journal entry, proposed dividend, you have said PL appropriation account debit to proposed dividend, it means you are recognizing, it means it become an adjusting event. Are bolna re? You know, but you are not applying once again whatever you have done at C inter level. It is non-adjusting na. Why it is non-adjusting? Anyone can explain. This is the dividend proposed for the last financial year, and that is before approval of financial statement. So can I say every income and expense of this year should be recognized in this year only? Are you able to understand? The rate was not known, but it was known before approval of financial statement. It is as simple as whatever we have done for gratuity. It is as simple as whatever we have done for gratuity. Gratuity may I have said adjusting event, bolo yes or no? But here AS4 or your teacher has said non-adjusting event. But why non-adjusting event? They have given the reason or they have not given the reason? They have given the reason. Why? Very good. Excellent. Propose means propose, not find. I propose a girl does not. Ready for? So I will propose. Correct. Propose does not mean final. So right now there is no liability, no obligation to. And there is no obligation to pay, no liability should be recognized. Means, can I say after proposal, this is approved by shareholders in what? AGM. In AGM, shareholders approved the rate of dividend, and once they approve the rate of dividend, it becomes final dividend. And we don't pass journal entry for proposed dividend, we pass journal entry for final dividend. Understood? Have you understood this point? Means can I say any dividend of 2020-21 will be recorded in the next financial year? Always. Final dividend will be recorded in the next financial year. So final dividend of 2021 will be recorded in 21-22. Correct. So when it becomes final dividend, when it becomes final, so can you say obligation to pay? Obligation to pay. And as per Companies Act, it need to be paid within 30 days of declaration. Bole yes or no? So it means once it is declared, means approved by the shareholders, it become a liability. Then we'll pass one journal entry. Journal entry is what? We'll pass one journal entry PL appropriation account debit to dividend payable. Correct? Now PL appropriation in CA final will be known as retained earning. Whenever I say retained earning is nothing but PL appropriation. PL appropriation was not, is a confusing term. Better word is retained earning. Correct? So can I use the word retained earning? Correct. So can I say the journal entry will be retained earning account debit to dividend payable? Dividend payable. And of course, as per Companies Act, it will be paid within 30 days. Then we'll pass journal entry dividend payable account debit to bank. Dividend payable account debit to bank. Understood? Understood this point? Means whenever it is proposed, no obligation to pay. No obligation to pay. No obligation to pay. So it is not a liability. Therefore should not be recognized as a liability on 31st March. Therefore it is a non-adjusting event. Chalega? Non-adjusting event. Understood? Whole. Have you understood what is written? Tick करेंगे. If an entity declares dividend to the holder of equity instrument, if an entity declare any dividend to the holder of equity instrument after reporting date, correct? The entity shall not recognize it as a liability at the end of reporting period. Means it is a non-adjusted. However, such dividend means proposed dividend, are disclosed in notes in accordance with Ind AS 1 or as per the requirement of Schedule 3. So any proposed dividend require only disclosure. Any proposed dividend require only disclosure as per Ind AS 1. So any amount of dividend proposed require only disclosure. But no recognition. Understood? Correct? Now there are 2 points. One word is written dividend to the holder of equity instrument. A new term in your life, equity instrument. Till now I think you have used only the word equity shares. So equity shares is an example of equity instrument. Equity instrument is a wider term. Equity shares is an example of equity instrument. Equity instrument is a wider term. So what is equity instrument that we discuss? Just write down, refer AS 32 coming soon. Correct? Understood? I'll just give a simple example. If you receive some amount from any holder and there is no obligation to pay, it is equity instrument. If you receive some amount from holder, any holder can be equity. Holders. You're getting what I am saying? So if you receive some amount from holder and there is no obligation to pay, then it is what? And if there is an obligation to pay, means obligation redeem, then it is what? A liability. Then it is not an equity instrument. Means redeemable preference shares will be equity or liability. Equity or liability? Liability. But as per CA it is shown where? Equity. Shareholders fund na? Maha bakwas. Are bolna re. Redeemable preference share capital you have shown in at CA Inter financial statement as per division 1 of schedule 3 where under the head share capital. But right now you have said liability. We should come in what? Liability either non-current or current. Is now that is also going to redeemable preferences will not come now where? Under share capital. Come under what? Either non-current or current. If there is any irredeemable preferences, then there is no obligation to pay, then it will be an equity. Thora understood? Not pura. Detailed discussion where we'll do? Ind AS 32. Ind AS 32 coming soon in your life. Now, what Ind AS 1 says? Required disclosure. Required disclosure. Now, one doubt will arise. Doubt not. A question will arise. This proposed dividend, whether it is a contingent liability. Contingent liability we disclose, na? Bolo. So, Ind AS 1 says required disclosure of proposed dividend to whether proposed dividend will be disclosed under the head contingent liability. Yes or no? Only this much you need to say. Whether it required disclosure under the head contingent liability. How many are saying no, sir? How many are saying yes, sir? Parents still thinking? With this we have done contingent liability, and if you are not answering means nothing to do. We have done the contingent. Apply the definition. Apply the definition whether this proposed dividend is a contingent liability or it is not a contingent liability. Bolo. Contingent liability means either present obligation or possible obligation. Proposed dividend is not an obligation only. So proposed dividend is not a contingent liability. Are bolna re? Apply definition. A contingent liability means either it will be present obligation or it will be possible obligation. Bole yes or no? Proposed dividend is no obligation only. Already I have said. So it is not a contingent liability. Don't disclose under that contingent liability. And therefore it was not covered under Ind AS 37. Therefore disclosure is required as per Ind AS 1. Otherwise so we should have written here Ind AS 37. Are bolna re? Apply your common sense. You are not applying. Maja nahi aa raha. I am not getting maja. Then I will teach and go. I will not ask question now. I will not ask question. Why I am angry right now? Because this point I have already done. I will not be angry if I am asking some question of CA Inter because that time I have not taken your class. But now Ind AS 37 is already completed. You know the meaning of contingent liability, but then also you are not able to respond. What will happen when I will complete 50 days? Understood. On 50 days, whatever I will teach on 50 days, I will link with the first day. थोड़ा सा you need to be correct. If you have an intention to answer now, answer will come. There must be intention to it. You must have intention of answering. Understood it is not a contingent liability. Got it? Yes, sir. This also done. We'll take a break. After break, we'll try to complete. 90% completed. Can we start once again? Yes, sir. I hope you are enjoying the class. I am also enjoying. You are also enjoying. मजा आ रहा है? ठीक है. For whatever we do in our life, whatever we are doing in our life, if maja is coming, maja means interest is coming, if you are enjoying it, then only you will get the result. It means if you are doing without interest, you are doing without doing but without interest, no output. Either output will be no output or output will be less. Means if you are reading any subject, even though you are not liking it, to read it, to create interest. If you are not able to create interest, you are hampering your life. It might happen out of 8 subjects, you don't like one particular subject. It's quite possible now. I may ask you, in CA Inter there were how many subjects? 8 paper. But out of 8 paper, you may not like one paper. Which paper you don't used to like in CA Inter? What? EIS. And any other subject? I don't used to like costing. And the labor chapter I have never understood. You have understood? It was very simple, formula based, but I have never understood why we are doing that chapter. You have understood that chapter? Are bolna re? Labor is maha bakwas chapter. Whenever I used to start labor, I used to go to some other chapter. Means I have never completed that chapter because I have not gained interest on it. Means I am hampering my own life. Bolo yes or no? Correct now. So even though out of 8 subjects, it might happen one subject you are not liking, but then also you need to love that subject. Then only interest will come. And if you are not loving it, then interest will not come, then something will happen in exam. Correct? Yes, sir. Give importance to all your subject as you give importance to all your friend. Bolo yes or no? And once you do not give importance to any friend, what will happen? Break up. Bolna re, we need to give importance. Yes? Yes, sir. 2 questions have been asked during break time. Let me discuss that 2 point. Both require discussion. So I will take that. One good question was asked. Let me discuss what is your viewpoint. I said, any major litigation after reporting date, this is date of approval. Suppose there was a major litigations after reporting date but before approval of financial statement. So it is what? Non-adjusting event. But if I say due to this litigation, going concern is affected. Quite possible. Quite possible. Are bolna re? Means on 31st March, we were going concern. But due to litigation, going concern is affected means now entity has an intention to liquidate. Intention to liquidate does not mean we started planning to liquidate. But when we'll have intention to liquidate, when we understand now we can't continue. Due to COVID-19, many business have an intention to liquidate. Bolo yes or no? Because they have understood that now we can't earn money in this market. Understood? Yes, sir. So going concern affected, now it become adjusting or non-adjusting? It is a non-adjusting, adjusting. Litigation, going concern affected, adjusting, non-adjusting. How many are saying non-adjusting? How many are saying adjusting? Means 1 second doubt is there. Nalayak, why you are saying non-adjusting? This now comes under the special case. Now going concern affected. Once going concern affected, it comes under a special case. Means I have taken the example of fire. So in exam also they will ask the case of fire only. Then I will die, you will also die. Going concern may be affected due to any reason. Only fire will occur, then only going concern will be affected. Are bolna re? Understood what am I saying? Going concern may be affected due to any reason. Litigation, when I have not discussed anything about going concern, then it will be non-adjusting event. Means when I am saying litigation after reporting date, it means going concern is affected. No. Fire occur does not mean going concern is affected. Means question will provide some additional information. Means I will say if going concern not affected, then it is what? Non-adjusting. And if going concern is affected, then it is adjusting and it requires fundamental changes in the basis of accounting. Please answer. Now, for assigned to think. Same question may be asked in exam also. Correct now. Now, when I am saying intention to liquidate, it does not mean you require planning for liquidation. Correct. What is the definition? Definition given. Have read it now. What they have said. Entities shall not prepare financial statement as a going concern if it intend to liquidate. If there is an intention to liquidate, so you are not supposed to start some planning to liquidate, or announcement is not required. No one will announce in public that we are going to liquidate. Whether I will announce that I am become bankrupt, ऐसा नहीं होता है. I have an intention to liquidate. It means now you become non-going concern. Means that fact need to be available from management only. Means as an auditor you need to ask the management that loss happened, now whether you want to continue or you want to discontinue. They will say continue if they have no intention to liquidate. And they will say yes, we have an intention to liquidate. Means now as an auditor you need to prepare financial statement based on what? Non-going concern. Even though it is not liquidated. Intention to liquidate. Understood? Have you understood? Yes, sir. Done. Now coming to disclosure requirement. This point number A was not given under AS4. Point number A is a new point which was not given under AS4. Correct? Difference. Date of approval of financial statement. Now date of approval is required. When the financial statement was approved, the date is required. As per AS4 it was not required. Then who gave the approval? The name of the person who has given the approval is also required. An entity owner or any other officer or owner who has the power to amend financial statement after Board of Directors approval is also required. I have already said as per articles of association, special power may be given to any owner to amend the financial statement after approval of financial statement. If that is the case, then the name of that entity's owner is also required. Understood? So these are three special disclosure which was not given under AS. Then updating disclosure about condition existing on reporting date for adjusting event. This is your doubt? Your point. Means updating disclosure is also an adjusting event. Updating disclosure is also an adjusting event. Understood? So updating disclosure about condition existing on reporting date for adjusting event. I have already given example. Already I have given the example. What example I have given? That on reporting date there was remote obligation. On reporting date there was remote obligation. Quite possible. So when we have remote obligation, it does not mean we do not have any condition. Condition was there, but obligation was remote. Correct? So it means no treatment. No treatment. But before approval of financial statement, something happened and now it become possible obligation. Chances are less than 50% but more than 5% now. Correct now? It become possible obligation, but it is an adjusting or non-adjusting? Adjusting, non-adjusting. Adjusting event, but will you pass any journal entry? No. It means disclosure need to be updated. Update the disclosure for this adjusting event. Update the disclosure for this adjusting. Yes, sir, we have understood. So updating disclosure about condition existing on reporting date for adjusting event will be also required for disclosure requirement. Non-adjusting event, if material, following disclosures are required. Where? Following disclosures are required where? In notes to financial statement. So in notes. Correct? nature of the event, estimate of financial effect. If can't be estimated, fact must be disclosed. Similar to contingent liability. Similar to contingent liability. Understood? Difference in AS 10, AS 4. First, non-adjusting event. What Ind AS 10 says disclosure in financial statement. What AS 4 says disclosure in the report of approving authority. Going concern require fundamental changes in the basis of accounting if going concern become invalid. AS 4 only require adjustment to assets and liability. They have said nothing about fundamental changes in the basis of accounting. However, practically there is no difference. Whatever we used to follow in AS 4, that only we are following under Ind AS 10. Means we need to redraft the financial statement based on non-going concern. And difference is only in what? Wordings. Correct? Then disclosure, of course, more disclosure under Ind AS 10, less disclosure under AS 4. This difference in every Ind AS. Correct? Distribution of non-cash asset to the owner. Distribution of non-cash asset to the owner deals in Appendix A to Ind AS 10. Appendix. I have said somewhere. IFRIC. Remember IFRIC? IFRIC means what? International Financial Reporting Interpretation Committee. So whenever there is some new point, there is some announcement, development which are not covered under some IFRS or IAS, so interpretation will be given. That interpretation now become appendix. Understood? So there is one appendix to Ind AS 10 which deals with what? There is one appendix to Ind AS 10 which deals with what? Distribution of non-cash asset to the owner. However, AS 4 was silent regarding this. Understood? Means this distribution of non-cash asset to owner is not covered under Ind AS 10. It is covered under Appendix A to Ind AS 10. If in exam questions come for distribution of non-cash asset to owner, and if you are mentioning as per Ind AS 10, it is completely wrong. It is as per Appendix A to Ind AS 10. Chalega? Understood? It means you can see now I am starting what? Appendix A to Ind AS 10. Is Ind AS 10 completed? Now we are doing Appendix A to Ind AS 10. Appendix A to Ind AS 10. Very simple. Correct? Nothing to worry. Distribution of non-cash asset to the owner. Owner here means holder of equity instrument. Holder of equity instrument, thoda you have understood. It will include equity shares, irredeemable preference shares, etc. coming soon in your life. Correct? So owner means holder of equity instrument, refer what? Ind AS 32. Definition is given under Ind AS 32. Correct? Distribution of non-cash asset. Now before coming to this para, let us understand what they want to say. So we are doing one topic. Distribution of non-cash asset to owner. Owner here right now, think about equity shareholders. Don't think much. Means we are discussing about equity shareholders. Okay? Now, this is entity and this is equity shareholders. Correct? Entity is an artificial person. Equity shareholders can be natural as well as artificial person. Is this equity shareholders can be a company also, na? Chalega? Now, what can be the possible transaction between these two persons? Person means artificial person also. Correct now? So can you say the first transaction number 1 is contribution from what? Contribution from what? Contribution from equity shareholder. contribution from equity shareholders. Is equity share capital? The journal entry you have done many times, bank account debit to capital. Correct. This contribution can be either in cash, or it can be also in the form of asset also. Only cash. It can be in the form of non-cash asset also. So non-cash asset also. Second type of transaction is distribution to owner. Are you getting what I am saying? Distribution. Distribution to owner. Distribution means dividend distribution. It can be either in cash, it can be non-cash also. No, we are not discussing about bonus. We are not discussing about bonuses, right? Cash or non-cash asset. It can be in the form of inventory also or not. Inventory distributed. Some diary distributed. We give some gift to shareholders in annual general meeting. Have you gone to annual general meeting? You are not shareholders of any company. Till now you have not started investing. No stock market. Vegetable market. Have you went to vegetable market? So why you have not went to stock market? Have you went to stock market? Anytime? Are bol yes or no? Went. And then only seen price and came back. No. As a CA finance student, must have a Demat account. Must. And from my point of view, you should invest only 500 rupees. Or maximum to maximum 5,000 rupees. Not more. And you should purchase, sale, only 5,000. So that you can understand what? Stock market. This 5,000 is the fee given to the stock market to understand stock market practically. Till you invest, you will not understand what is stock market. As a CA student, you should know what actually stock market is. Because you will study SFM also. SFM is totally based on what? Market. So if you are doing, if you have done SFM without having Demat account, you have not understood SFM. Correct? Understood? How many have done SFM? No one, na. You have done, you have Demat account? First said yes, then says no. So you have Demat account opened or not? Then okay. Now start investing. 5,000. How much? One IPO you have invested. Chalo, theek hai. Try it now. So you also open. Correct? How to open? Google Baba is there. Okay? Correct? Now, cash or non-cash asset. You know, I am the owner of Reliance Industry. No? Okay, some money always call me. But I say, I don't have time, you only manage. I say, I don't have time. Correct? But I am the owner. Feel good, na? Distribution to owner. I have Demat account. Very good. So they have done SFM and they have Demat. You started investing or not? Open Demat account. No investment. That is also not good. You should start investing also. This also you have understood. Distribution. Third transaction. Whether there can be any trade transaction between them. These are not trade transaction. Whether there can be sale purchase between them. Sale purchase bole ya son, loan etc. Yes, correct. So when I am saying sale purchase, there can be sale, purchase or loan etc. transaction. You can see in the first two there is only one side arrow I have given. In third there are two side arrow. Means, can I say third is two-way transaction? Means, Just try to understand, if there is a sale, so it becomes purchase for other entity. Means it is known as reciprocal transaction. New term. Reciprocal transaction. And this transaction will be covered in respective Ind AS. Sale, purchase, loan, respective Ind AS. So this is covered, these transactions will be covered under respective. Means we are not discussing about reciprocal transaction between entity and owner right now. अरे बोलना रे, correct? Respective Ind AS. Automatically you will understand this in respective Ind AS. Now these two are known as non-reciprocal transaction. Non-reciprocal transaction. Correct? And any contribution to equity shareholders in the books of entity. Right now we are discussing about entity, not about honor. Journal entry in the books of entity. Correct? This is covered under Ind AS 32. Coming soon. Both are covered under Ind AS 32. Contribution from equity shareholders. Understood? Correct? Or you can also write down, I don't want to write down, you can write down Ind AS 102 also for non-cash asset. Means if any plant is purchased and equity shares is plant purchase, so the contribution of plant. Understood? Contribution of plant or contribution of property, plant and equipment. Correct? For that equity shares issued. For that what is issued? Equity shares issued. Correct? Understood whatever I am saying? So in Ind AS 102 it will be covered. Coming soon in your life. Means this is also not covered in this appendix. Any distribution of honor to cash means dividend. When we say cash, so in our mind what will come? Dividend. This is nothing but dividend. This is also covered under Ind AS 32. Ind AS 32. Correct. Now, distribution to honor by way of non-cash asset. Can you say it is also dividend? We may give cash or we may give non-cash asset also. This is also dividend only. Dividend only. Correct. Can you see it should be also covered under Ind AS 32 only? But Ind AS 32 was silent regarding non-cash asset distribution. Therefore, there was doubt in industry. What will be the accounting treatment for distribution of non-cash asset to the owner? Because Ind AS 32 says dividend, this is the journal entry, but they have not given any specific information about distribution of honor to distribution to honor in non-cash asset. Therefore, some interpretation was required. Some interpretation was required. Can you say that interpretation of appendix should be given in Ind AS 32 only? Should be given under Ind AS 32? I have not understood why such interpretation of appendix was given under Ind AS 10. I think they are confused with this point. Why they have given? From my point of view, this appendix should be given where? Under Ind AS 32. Are you bolna? Yes or no? But I think because proposed dividend was covered here, they have covered this appendix also here. But can I say this topic has nothing to do with adjusting and non-adjusting wala point? So it is totally different from adjusting or non-adjusting event. Are we able to understand? From my point of view, this appendix should be added under Ind AS 32, not under Ind AS 10. I think by mistake, they have added under Ind AS 10. Let us read. Sorry. They have added, we'll read it. Are we able to understand what I am saying? Are bolna rahi? You are able to follow me? Write down. This is covered under Appendix A to Ind AS 10. Have you understood what topic we are doing? Now, right now we are only doing distribution to owner in the form of non-cash asset. But it is nothing but dividend. It is nothing but dividend. Now, you know the journal entry of dividend. What is journal entry of dividend? Retained earning to dividend. Then dividend to bank. This journal entry of dividend. Journal entry of dividend will remain same whether it is cash or non-cash. Arey bolna se. What is journal entry for dividend? Retained earning to dividend payable. Then dividend payable to cash. Dividend payable to cash. So journal entry is not going to change. So let me take one example, and you are chartered accountant. You only give the journal entry. I will take one case study. Correct? Yes, sir. Till now, no question has been given in ICA study material for this topic. Whenever no question, it means they will not ask any question. Should I do or should I leave? Should I do or should I leave? Do or leave? Do. Because you are saying that's why I am doing, otherwise I would have not done. Because you are saying I am doing. Can I take it? Yes, sir. Take it. So I have already created one example. Don't refer, answer. Example number 1 for this in the Ind AS Saransh book. The example is given in Ind AS Saransh book. Entity proposed distribution of 1 pen to all shareholders on 15 Jan 2017. 1 pen. Pen of rupees what? 500, Baba. Correct? It can be good quality pen. Entity declared and approved the dividend for Entity declared and approved the dividend for distribution of 1 pen to all shareholders on 15 Feb. Means it was approved, it was finalized on which date? 15 Feb. Achha, do you know about difference between interim dividend and final dividend? Final dividend already I have done. Final dividend will be proposed by board of directors and approved by shareholders. Journal entry of final dividend will be done next financial year. Already done. What is the meaning of interim dividend? Correct. This interim dividend will be declared by board of directors without any approval from shareholders. So interim dividend of current year will be recorded in current year only. Interim dividend of current year will be recorded in current year. Understood? Got it? Yes, sir. Correct? So, entity declared and approved the dividend for distribution of 1 pen to all shareholders on 15 Feb. You can see in the same financial year. It means it is just like interim dividend. Just like interim dividend, it does not require approval of shareholders. Does not require approval of shareholders. Understood? Correct? It was actually distributed on AGM. AGM in the next financial year, which was held on 15/5. Fair value of each pen. Fair value. Not cost price. What is the fair value right now? Correct? What is the meaning of fair value? We'll understand in some different chapter. Fair value you can understand ki market price. How, at what price it is available in the market. Right now. This much only. So fair value of 15 Jan on the date of proposal it was 500. Then on 15 Feb on the date of approval it was 500. Then on 31st March reporting date it become 520. Then on 15/5 on distribution date it become 515. But the cost price of each pen is 400. Let us assume this pen is inventory. Means this is the inventory of this entity. Let us assume it can be some other item also. And the cost price of this pen is 400. Number of shareholders is what? 1000. 1000. The question. You will give me journal entry. You will give me journal entry, okay? Correct. So I will once again explain what is given. So we are doing example 1 given under Ind AS Saransh book. Write down which book? The example has been taken from Ind AS book. First first date is 15 Jan, then 15 Feb, then 31st March, and then 15 May. The fair value of each pen was 500, then 500, then it become 520 na, and then it become 515. Practically the fair value of pen will not change this much. Practically, I have taken this example to cover all the points of this concept. This pen value will not change in this way na. It is not gold. Are you able to understand? So don't ask me that question, how the value of pens will increase. Correct, don't ask me this question. I have taken one hypothetical example. Understanding? Yes, sir. And the cost price of that pen was how much? 400. Now, you will say me the journal entry. This is reporting date. On 15 Jan, what is the date? 2017. 15 Jan 2017. Batao. On the date of proposal. This is date of proposal. What journal entry? Date of proposal. What journal entry? No entry. There is no obligation to distribute. Correct? No journal entry. You are applying your common sense. Now you don't require appendix A. You don't require appendix A. You can give journal entry by your own. Are bolna re. Because you are chartered accountant na. No journal entry. Then on 15 Feb 2017, batao, date of approval. The date of approval, or I can say date of declaration. Date of approval. Batao, what journal entry? Well, retained earning. Retained earning to what? Dividend payable. Is now there is an obligation to distribute. Correct? So dividend payable, or you can add on dividend distribution also. Whatever you want. Dividend payable. What amount? What will be the amount? Means we'll consider 400 or 500. This is the point where you need to think logically. Dividend distribution, dividend payable. You are distributing one pen whose fair value is 500. However, you have purchased at rupees 400. However, you have purchased at rupees 400, but whose fair value right now is 500. But you will take 500 or 400, whatever. What do you think? 500, 400? Everyone saying 500? Yes, boldo. Yes or no? Is now you are thinking conceptually. Started thinking conceptually. 500 will come. Because you are distributing a pen whose worth is what? 500. Are you able to understand? Right now we are not accounting inventory. Whether we are de-recognizing inventory, no. This dividend payable. Dividend payable. Payable in the form of non-cash asset whose fair value is what? 500. Means if it is distributed in the form of cash, so we would have taken the value of cash only, na? Are you able to understand? Correct? Suppose it is distributed in foreign currency. So foreign currency current value. Bolna re. Understood? Yes, sir. Means 1000 into 1 into 500. Every shareholder's one pen. It become how much lakhs? 5 lakh. 5 lakh, na? First journal entry you have understood. Then on 31st March, practically the fair value will not change. But I have taken hypothetical example. If from 500 it become 520, fair value change before distribution. Batao, any adjustment required in dividend payable? Whether will increase dividend payable because of changes in fair value? What do you think? Yes or no? Should we adjust? Means on the date of proposal, the value, on the date of approval, the value was 500, but on 31st March, it become 520. Till now, you have not distributed it. Till now, inventory is not distributed. Till now, asset is not distributed. So, dividend payable will be adjusted or will not be adjusted? What do you think? Adjusted only. Fair value of that asset increase. fair value of asset increased. So what journal entry you will do? You only say retained earning, account debit to dividend payable by what amount? It is 1000 into 1 into 20. That is how much? 20,000. Super easy. Do you require appendix A for this? Only in exam you will mention appendix A. Correct. Now, distribution date came next financial year. Now, before distribution, you came to know that fair value is now 515. So, will you adjust your dividend payable? Before distribution, fair value become 515. So, your dividend payable should be adjusted or should not be adjusted? Adjusted. Of course, adjusted. Because the worth of pain is now 515. Correct. So, now you will decrease dividend payable. What journal entry? So, on 15th May 2017, what journal entry? Dividend payable. Dividend payable. Account debit to what? Retained earning only. How much? 1000 into 1 into 5. That is 5000. Means on the date of distribution, what is the dividend payable? On the date of distribution, dividend payable become 5,15,000. 5,15,000. So now my liability is 5,15,000. Now we'll distribute, means we'll what? Reduce our liability with the distribution of asset. So now on 15/5, same date. For distribution, what journal entry? Think and say, For distribution, what journal entry? बताओ. Dividend payable बोला? Dividend payable. Can add on to non-cash asset, or because I have assumed it is inventory, we can add on inventory also. Correct? To inventory can add on? To inventory. Dividend payable how much? 5,15,000. Correct? How much inventory? Means inventory will be de-recognized at its carrying amount. Carrying amount means cost price or NRV which is lower. So it will be at cost price only. Correct? Understood? So how much? It will be 1000 into 1 into what? 400. That is 4 lakh. Means there is a difference. Difference of how much? 1,15,000. Now everyone just try to understand. Let me explain first, then you will answer. Means till now, whatever journal entry I have done, that you have only said, I have not given journal entry. This is what? A new way of learning. My class, I will not do anything. Till I feel that my explanation is required. You need to only give journal entry. You need to only think. I will not say anything. You can see I have not read the concept only. I have just given a topic. I have just given you what actually topic we are doing. Then we started. Why? Because I think you are best chartered accountant. I think you can draft any standard. Who draft accounting standard? CA only. Correct? Understood? Yes, sir. So 1,15,000. Now my question to you all. This difference will go to PL or retained earning. Just try to understand. PL. Means in PL we transferred any income and expense. And dividend is not income and expense. Correct? Dividend is distribution. Correct? Dividend is distribution. Are you able to understand whatever I am saying? So dividend is distribution. So for dividend you can see we have debited retained earning, not PL. Means this is nothing but PL appropriation account. PL appropriation account. Means whatever we distribute to the owner is not debited to PL, it is debited to what? Retained earning. From bachpan se we are doing. But any income and expense means, can I say this dividend payable, this dividend is not an expense? Is not expense. Correct? Why it is not an expense? Because it does not meet the definition of expense. Have you done the meaning of expense anywhere? You have not done, na? We'll do it. Nothing to worry. Everything we'll do here. Income, expense, liability, asset, current liability, property, plant and equipment, intangible asset, inventory, financial asset, non-financial asset, everything we'll do. Correct? Now, have you understood what I am to say? If it is income and expense, it will go to PL. If it is not an income and expense, it will go to retained earning. Dividend will go to retained earning. Already we have done. Now the question is that, I'll just give one hint. Income and expense means what? Any decrease in asset is what? Expense. Any increase in asset is what? Income. Any increase in liability is what? Any increase in liability is what? Expense. Any decrease in liability is what? Understood? Correct? Understood? Now say, this will go to PL or retained earning. You can say. When you are saying it will be transferred to PL means it will affect net profit. Net profit means it will affect EPS. So it means correct interpretation is required. When you are transferring retained earning, means it is not affecting net profit, means it will not affect EPS, earning per share. A lot of clarification is required. Understood? So whether it will be a gain or loss, income and expense, or it is not an income and expense. What do you think? Follow, apply your common sense. This 4 lakh cost has been distributed to the owner due to increase in the value of, means this 4 lakh, you have purchased at 4 lakh, but you have distributed to the owner an inventory whose fair value is 5,15,000, means the asset value has increased from 4 lakh to 5,15,000. Follow, yes or no? Correct? Simple. Just try to understand. Suppose you purchase an inventory of rupees 4 lakh. Correct? Understood? Now you want to give dividend in cash and you don't have cash, what you will do? You have inventory of rupees 4 lakh, you want to give dividend in cash. Are bolna re? So what you will do? And you don't have cash, what you will do? You will sell the asset. So this sale will be transferred to what? PL at rupees 5,15,000. How much profit will be earned? 1,15,000. And how much cash is there? Cash is there 5,15,000. 5,15,000 means when you will pay dividend, what journal entry will do? Retain earning to dividend payable, or you can say cash 5,15,000. 5,15,000 means your retained earning will be debited with how much? 5,15,000. Already you have debited retained earning by how much? 5,15,000. Now this gain or loss is transferred to what? PL. It is as simple as this is increase in the value of asset. An increase in the value of asset means what? Income. And income will be transferred to what? PL. Means this difference will be transferred to PL, not retained earning. Only this concept I have taken because of this. Otherwise, so it was very simple. Understood? Means retained earning will be debited only with the amount of dividend whatever you are distributing. That was 5,15,000. But any difference in the carrying amount of the non-cash asset and its fair value will be what? Gain or loss, that will be transferred to PL. That will be transferred to PL. So can you say this become what? Gain? Gain on distribution, you can say. Gain on distribution, which will be transferred to what? PL. This will be transferred to PL. SOPL. This will be transferred to SOPL. Understood? Have you understood? Done. Over. Concept over. Simple. Understood? With concept understood? Correct. Any doubt you can ask. Now just try to understand. I could have also said gain will be transferred to PL, and believe me, you have not asked any. Believe me. Believe me, I can curtail my number of hours by only writing PL. And believe me, no CA final student will ask any question from me because you are habituated of not asking. But I am asking, I am creating doubt, I am solving doubt, I am only creating doubt, I am only solving doubt, I am only becoming student, I am only teacher. One day I will not create any question and I will inform you that you have not understood but you have not asked me anything. That time you will feel the importance of this discussion. Because in exam, if you have written retained earning, then 10 marks question become what? 2 marks. Or 10 marks question become 2 marks or 3. Every marks count. Ask any student who has got 190 the group. 190 fail, 100 is. From my point of view, difference between 190. But once again, 190 6 months. 6 months. 200 means. Anyone got 199? For the importance of 1 mark. Anyone? Anyone who got 199? Bolo. Got? Just ask any student who has got 190. You will understand the importance of 1 mark. Anyone who has got 59? Any paper? No. So can I say the difference will be transferred to PL? Why? Because it is income and expense related to increase in the asset. Because inventory of 4 lakh is now become 5 lakh 15,000 and any increase in asset is income which is transferred to what? PL. Understood? So this gain or loss will be transferred to PL. It means we need to understand the definition of income. Till now we have not done definition of income. Bolna yes or no? Once you have understood the definition of income and expense, this automatically will be cleared. Just write down the definition of income will be done in chapter number 1. Chapter 1. I could have started with chapter 1, but intentionally I am not starting. Intensely I am not starting. I will do chapter 1 at the end. But I will discuss every related concept. Have you understood this point? Yes sir, we have understood. Now let us come to the concept. What they have given. Check karte hain whether whatever I have said that is given or not. First, point number 1. Non-applicability of Appendix A to Ind AS 10 means it is not applicable to these 2 points. First, it is not applicable for accounting in the books of shareholders. Means we are doing accounting in the books of entity, not in the books of shareholders. Correct? Understood? Means Appendix A is applicable in the books of entity, not in the books of shareholders. So in the books of shareholders who receive such distribution. It is also not applicable to distribution of non-cash asset to entity. Entity can be also owner. Entity can also be owner. Are bolna re? So it is not applicable to distribution of non-cash asset to entity which is ultimately controlled by same party before and after distribution. Have you understood? Have you understood? What do you have understood? I have also not understood. Correct? Don't worry. This point we'll discuss under business combination. Whenever there is a control now, the control means we need to go to which chapter? Ind AS 103 business combination. Correct? So this point once again I will take into consideration in which chapter? business combination chapter. We'll come back again to this chapter. Correct? Yes, sir. So it is not applicable to distribution of non-cash asset to the entity which is ultimately controlled by same party before and after distribution. You have not understood. I have also not understood. Refer in AS 103. Okay? Correct? Yes, sir. Applicability, it applies to the following types of non-reciprocal transaction. Understood? Non-reciprocal transaction means it will never be applied to reciprocal transaction. Non-reciprocal transaction between entity and owner. So only which transaction? Distribution of non-cash asset, not distribution of cash. Appendix A is not covering distribution of cash, only distribution of non-cash asset or distribution that gives owner an option of non-cash asset or cash alternative. Means suppose distribution is like this, either you take pen or take cash worth rupees 500. It means options is given. So then also it is covered under Appendix A to Ind AS 10. Understood? Accounting treatment on the date of proposal, no entry. On the date of declaration and approval of such dividend, retained earning to dividend payable with the fair value of non-cash asset held for distribution. That only we have taken. On reporting date before distribution, means if there is a reporting date before distribution, dividend payable will be reassessed with any changes in the fair value of non-cash asset held for distribution. Understood? Yes, sir. On the date of distribution, dividend payable account debit to non-cash asset, dividend payable account debit to non-cash asset. Any difference will be recognized in PL. Any difference will be recognized in PL. You can add on PL means it become gain or loss. Gain or loss on distribution. Understood? Super easy. I don't know whether question will be asked from this topic or not. But I have covered because it is a part of syllabus. Correct? Yes, sir. This much you understood? Now, let me thoda sa elaborate. We are discussing about non-cash asset. Okay? Means whenever we are thinking about non-cash asset, so from this topic, there are 2 points. One is distribution, one is measurement. Means distribution of non-cash asset is covered under Appendix A to Ind AS 10. Understood? But when we say measurement of what? Non-cash asset. Measurement of asset, na? Measurement of asset before distribution. Correct. Measurement of non-cash asset held for what? Distribution. Held for distribution. Means before distribution, it is non-cash asset held for distribution. It is not yet distributed. It is held for what? Distribution. So can you say this can be either inventory, it can be either property, plant and equipment. Property, plant and equipment. Are you getting whatever I am saying? Correct. Or it can be intangible asset, it can be investment property. Can be investment property. Now, if it is inventory, then measurement will be done as per Ind AS 2 only. Here is a measurement we do at each reporting date. Ind AS 2 says cost price or NRB, whichever is lower, as per Ind AS 2. But if it is property, plant and equipment, intangible asset or investment property, then measurement will be done as per Ind AS 105. Oh, अच्छा, ये बात coming soon in your life. Ind AS 105. I'm just giving reference because once we complete the syllabus and you do revision, you will understand. Let us go to Ind AS 105 and see what that Ind AS says regarding this. So you can correlate this concept with Ind AS 105 concept. Right now I can't discuss because I can't take Ind AS 105 immediately. Have you understood? This is for measurement. So measurement of asset is not covered under an appendix. Measurement is done as per respective Ind AS. That I want to say. Means appendix only deals with distribution, retained earning to dividend payable. Correct? But measurement of asset will be covered under respective. Understood? Have you understood this point? Correct? With this, Ind AS 10 and Appendix A to Ind AS 10 is completed. 15 minutes is left. What I should do? 15 minutes is left. Should I start another Ind AS? What do you say? Normally I start. But because this is first Sunday, better not to start. Better not to say start, otherwise you'll think some negative points about me. This teacher is bakwas. Only teachers teach. Now, what is the message for today? But I would like to give message. Whenever I forget to give message, not just what? Ask me to say something about the day. Message means always I'll give something to you which will help you to improve. I can't motivate you. And I can't demotivate you also. But I can help you that how to improve. Correct? Now, there is a very important saying that whenever we do, you need to say, I am doing this for me. Very important. I am doing whatever I am doing, that I am doing for myself. Understood? And can I say you are becoming CA for whom? Yourself. Can I say when you will become CA, whether it will affect my life? When you will not become CA, whether it will affect my life? No. Means whatever you are doing for yourself. Can I say if you are doing for yourself, to do it, complete it as soon as possible? Correct now. And you should not give any excuses for that. Correct now. Means even though you don't have time, you should study. Correct now. Even though you are busy in your articleship, then also you need to study. Because you have limited time. Time is already defined. Suppose you have 1.5 years, that is defined. And you don't know when that 1.5 years will become 2 months. You don't know. So you need to study right now. Start from now. Don't defer it. Study that much. What is possible? What is not possible you can't do. But if you are wasting your time in unnecessary activity, that is not actually advisable. So what I suggest, whatever time you are getting, revise the subject. Suppose you are not getting any time, when you are taking lunch, that time you can. And so you are eating food, now you can keep the book aside. Are bolna re? Understood? You are doing some other activities which might not require that much time. You can study at that time also. Correct. You have 24 hours. Everyone have 24 hours. Some of you will become CA and some of you will not become. Correct. Everyone has 24 hours. Start thinking that whatever you are doing for yourself. Then only you'll. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining